Hey friends, welcome to the Singapore Market Digest for Tuesday, July 1st, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX, giving you the critical updates you need to stay on top of your game. The Investing Iguana is ranked 8th in the 24 influential tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. Today's market showed some interesting moves across different sectors, with property developers making strategic partnerships while tech companies expand their market reach. The Straits Times Index closed relatively flat today, but beneath the surface, there's plenty of action happening in individual stocks. Let's break down what happened and what it means for your portfolio. Starting with City Developments Limited. Trading under SGX ticker C09, this property giant made headlines with a smart strategic move. CDL's Singapore-based subsidiary, Millennium Hotels and Resorts, just launched a cross-brand loyalty program with Germany's Maritime hotels. This isn't just another corporate handshake, it's a calculated expansion into the European market that could drive significant revenue growth. Think about it this way. When you're traveling to Germany or anywhere in the EU, you'll now get discounts at participating properties if you're already a member of either loyalty program. CDL's chairman Kwek Leng Beng highlighted that this collaboration opens doors to Germany and the broader European Union, which represents a massive travel and business region worth billions in tourism revenue. The market liked this news, with CDL shares finishing Monday 1% higher at $5.19. What's particularly interesting here is how this partnership strategy positions CDL for the post-pandemic travel recovery. Europe is seeing strong tourism numbers in 2025, with Germany alone expecting over 400 million overnight stays this year. CDL is smart to tap into this market through strategic partnerships rather than expensive acquisitions. This hotel partnership strategy shows CDL is thinking beyond just Singapore's borders. In today's interconnected world, having international partnerships can drive occupancy rates and revenue per room, two key metrics that hotel investors should always watch. With Singapore's hotel occupancy rates currently sitting at around 85%, CDL needs these international tie-ups to maintain growth momentum. Moving to the tech sector, UMS Integration, trading as SGX 558, took a significant step by announcing its secondary listing on Bursa, Malaysia's main market. CEO Andy Luong explained that this move aims to broaden their investor base and improve liquidity while providing flexibility for future fundraising. This is becoming a popular strategy among Singapore tech companies looking to access diverse capital pools. Here's why this matters. UMS Integration is a semiconductor manufacturer, and this industry is all about scale and access to capital. By listing on multiple exchanges, they're essentially casting a wider net for investors. The semiconductor sector has been volatile throughout 2025, but companies with strong fundamentals and strategic positioning often benefit from increased market access. The stock closed Monday down 2.2% at $1.33, but don't let that daily movement fool you. The semiconductor industry is experiencing a major upswing driven by artificial intelligence demand and 5G infrastructure build-out across Southeast Asia. Malaysia's tech sector has been particularly hot this year, with the FTSE Bursa Malaysia Technology Index up over 15% year-to-date. What's particularly noteworthy is that UMS Integration operates in a sector that's crucial for Singapore's economic diversification. The government has been pushing hard to establish Singapore as a regional semiconductor hub, and companies like UMS are riding that wave. Singapore's semiconductor output grew by 8% in the first quarter of 2025, showing the sector's resilience. Capital World Limited, ticker 1D5, had some positive legal news that might seem small but could have bigger implications. The Sessions Court dismissed legal claims against its subsidiary Capital City Property and even awarded costs of 9,000 ringgit in their favor. However, the plaintiffs have filed an appeal, so this story isn't over yet. The stock remained flat at 0.02 cents, which isn't surprising given the penny stock nature and the ongoing legal uncertainty. With a market cap of just $32.20 million, this is clearly a speculative play for risk-tolerant investors only. Legal victories like this can sometimes provide catalysts for penny stocks, but investors should always be cautious with such small cap names. Now here's the big story that could reshape Singapore's IPO landscape. Japanese telecom giant NTT is seeking to raise up to $864 million in a Singapore IPO for a data center REIT. This would be Singapore's biggest IPO since 2017, potentially breaking the drought that's been affecting our exchange for years. The NTT DC REIT portfolio includes 6 data center assets across the United States, Austria, and Singapore. The base offering is valued between $772 million and $812 million, with an over-allotment option adding another $51.5 million. What makes this particularly exciting is the timing and the sector focus. Data centers are the backbone of our digital economy, especially with AI and cloud computing driving explosive demand. Global data center capacity is expected to grow by 25% annually through 2027, driven primarily by AI workloads. Singapore has positioned itself as a key data center hub in Asia, with strict regulations ensuring only the most efficient operators can build here. The REIT is being marketed with an indicative distribution yield of 7 to 7.5% for the July to March period, which is attractive in today's interest rate environment. With Singapore's 10-year government bond yielding around 3.2%, this REIT offers a compelling premium for income-focused investors. Singapore's Sovereign Wealth Fund GIC has already committed $101 million as a cornerstone investor, which shows serious institutional confidence. When GIC backs an investment, it usually signals strong fundamentals and growth potential. The listing is scheduled for July 14th. And this could signal a revival of Singapore's IPO market. The Singapore Exchange has been working hard to attract listings, including offering a 20% tax rebate for primary listings. For companies with market caps over $1 billion, this could mean savings of up to $6 million. SGX is also streamlining its listing process and offering more flexible structures to compete with Hong Kong and other regional exchanges. Looking at today's developments, I see 3 key themes emerging in the Singapore market. First, we're seeing companies actively pursuing international expansion and partnerships, like CDL's hotel tie-up. This reflects the reality that Singapore companies need to think regionally and globally to drive growth in an increasingly competitive landscape. Second, the tech sector continues to evolve with companies like UMS Integration seeking broader market access. This dual listing strategy is becoming more common as companies look for diverse funding sources and investor bases. It's a smart move in today's fragmented capital markets. Third, and perhaps most importantly, the NTT data center REIT IPO represents a potential turning point for Singapore's capital markets. If successful, it could attract more quality listings and restore confidence in the SGX as a viable listing destination. Singapore needs more large-cap IPOs to maintain its status as a regional financial hub. For retail investors, today's news reinforces the importance of staying diversified across sectors while keeping an eye on companies with strong international strategies. The data center theme, in particular, is worth watching as digital transformation continues to accelerate across Asia. These infrastructure plays often provide steady income and capital appreciation over time. That's the scoop for the SGX today, July 1st, 2025. Navigating these daily market shifts is crucial for your wealth growth in Singapore. If you found this digest helpful and want to get my real-time analysis, urgent insights, and a daily heads up on crucial market movements delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $1 a month, less than a cup of coffee. Think of it as your daily dose of market foresight directly from my desk. Ready to stay ahead in the Singapore market? Just click the link in the description below to become a member. For those interested in learning more about REITs and how to evaluate them, check out our previous deep dive video on Capitaland China Trust, where we break down the key metrics every REIT investor should know.